All right, in this video, I'm going to go over the stock screens I use inside the MTS Velocity platform. I had a good question over the weekend. It was basically asking, what screens I use and, how I use them in my process, or if there's any recommendations on other screens I should be giving people. And so, I'm going to kind of show you what I use. And bottom line is, these presets here aren't just for you guys. I mean, they are, but it's also ones I use daily. So the leaders cancel them screen is usually the first ones I look at. Why? It was a screen that I used for years, very similar, not exact, but to that Market Surge, Market Smith, IBD had that I was using. So I click this one, and I always start with the 1 year RS. Now, why do I start with the 1 year RS? Because for me, I do both. I have an account for swing trading and I have an account for my position trading. And basically the 1 year RS finds names in both. It's some of the best swing trades are names that have a high 1 year RS. And a lot of swing traders, they're using Market Surge, and looking at IBD, and they're short-term swing traders. IBD's standard RS is like over a 1 year period. And so now I will go shorter time frame, like guys like Qualamagi look at 1 month, 3 month, 6 month, and that's why I have that capability. But I'll usually start with a 1 year, and I'll do a lot of my screening on the 1 year. Then I'll look at some of the same screens, and I'll look at 3 month. Then I'll look at 1 month. Then I'll look at custom time period, like, we had a major market shift on July 29th. Coming off the lows. So I'm going to set that date as a custom date. Or back April, after we had the follow-through day and we started having all that big uptrend in early April, I would set the custom date, look back from the lows there, which was March 30th. And so, because it's kind of shifting, we kind of know there's kind of a regime change, there's kind of a change in the market, and we saw the leadership with semis and computer hardware, so I would set it there. So I do all of the above. All right. I know that's pretty complicated for most, so you can just keep it simple with just the 1 year RS is always kind of the best. And then, if you're a shorter term swing trader, I'd be looking at 1, 3, and 6 month. And so I run that screen. I'll also, run through kind of the big earnings and sales. And, it just sets higher EPS, slightly higher earnings, and then I'll add in some of my other custom filters. So besides presets, in advanced filters, I do additional things. I go show filters. I'll add like other fundamental filters, and I want to add ROE and pre-tax margins. And I show all this stuff in the full 2 hour tutorial. So if you want to know how to do that, just watch that. But then, from there, I'll save it, and you'll see here under my screens, I have ROE and margins. So now I'm basically saying I want to see stocks with, this is saying 90 on the 1 year with big earnings and sales, and the ROE and margins are at least 15%. And so the reason why I did that is in O'Neill's book, for those of you that don't know, he says 17% for ROE. Or if it's below that, he looks at pre-tax margins. And that's what this basically does. And so I'll run through that. And I'll check all this. And then I'll change it up. I'll go off of okay, I want to see the screen on the good 1 year RS, but what's been doing well over the last week and month, and I'll check that. And what you'll see is a lot of the names that have been performing. Versus just sorting it from the strongest 1 year, you see a lot of the names that have been breaking down. And I'm going to actually come back to this at the end of the video and kind of get to some more nuance with this so you guys kind of understand the difference in these low RSs. And so I'll do that. So I go through my presets. Some of you don't need to look at pre-market movers, you don't have the time. So a lot of this also has to do with your time. Are you a full-time trader where you have all the time in the world like I do from sun up to sundown? Or do you work a job? And can slim and growth stock investing actually is amazing for if you have a full-time job. Your process is going to be different. Your time frame will be a little further out. So like for me, my process then was, maybe I couldn't look and I didn't care about what was moving pre-market. I was looking at more weekly charts. I was doing most of my screening and market homework on the weekend. And I was just, whenever I could, I was maybe less consistent. I was checking in on the screens and the stocks throughout the week, right? So you're just going to have a different process. But, I look at these. Some people will, some won't. Now, new 52-week highs, the N and CanSlim. I'll look at that. I'll look at all these. Some of these you'll notice, I'm seeing the same names I could just get out of the first two. So I don't really need to. I definitely glance at, because I want to know, what has moved up 10%. So you may only have 1 to 5 names a day, but I kind of want to know what's gapped up big, and then I'll do additional work and see if it's a name I'd like to trade. More screens. So I also look at some of these. These are some, screens I've used for years. And, William J. O'Neill screens, very similar to the Leaders CanSlim. I'll look at the IBD 50 or Growth 250. I'll look at David Ryan's Ant kind of list. And I kind of go through those. And, then I just have other screens that I save from advanced filters, like the MTS score. It's basically saying I want to see, all the stocks that have an MTS score of 90 or above. And then I'll sort it, and I'll kind of go through the list. And what else do I look at? I'll also want to look at volume change. Like, for example, I'll take the volume change, basically, that they're up 50% or more, 100% on volume, and I'll add that with like the Leaders CanSlim. And it'll show me, where is the volume? Here we go, volume change. Let's move this over here. These are going to show me the names with big volume. You can see the volume there. Not, some of them will be like, okay, you got big volume, it's not doing anything. But, you have to go through it. And, as I'm looking at this, because I look at technicals and fundamentals, I'm looking at, what do the earnings look like, the sales, the fund ownership, the price and volume action, and the RS, and what's the relative strength across, multiple time frames. What does that look like? And so I'll just keep going through the list. I may go through, just like, again, I didn't invent any of this. When I was a young, just starting out trader, I'm listening to all the guys that are older than me, that have done this longer than me, and they're saying, hey, they spend a couple hours, they'll spend an hour every night or 30 minutes, and they're just going through the charts. They're looking at the same screens that I'm telling you they've been doing, and I've learned from them, and they're adding to watch lists, adding to near pivot or almost actionable. They're setting alerts, like if you want to buy a breakout to highs, or you want to look for a buy point as it's pulling back into support or a key moving average, you can set an alert. An alert will tell you to your device, and then you can come look at it and see if it's something that's actionable, right? So then besides volume change, I have this as just to add ROE and margins. I showed you that. This is another kind of CanSlim filter. I'm basically saying I'm adding higher liquidity. Like I want to see names that have at least 1 million in average volume per day and at least a market cap of $1 billion, instead of the standard universe of 100 million for the market cap and 100,000. I want a more liquid name, but the rest is pretty much the same. Big earnings, big sales, at least $10. ROE and pre-tax margins are, one of them's at least 20%. We're within 15% of highs. I also have the trend template, which is in here. It's not as strict as Minervini's, but it's the one that I've always liked to use. It's always served me. It's basically just saying within those stocks that meet those fundamentals and have high RS, now I'm also saying the price has to be above the 200-day and the 50-day moving average, which is pretty much close to the same as the 40-week and the 10-week. And the shorter-term moving average must be above the 200-day. And you could take this even further and say that the slope of the MA needs to be rising for X amount of bars. And you could even say, I want to find these names sooner. And this, I actually got this, I added this recently because a really good member that I've almost becoming friends with, he recommended this on one of our VIP calls. Like, hey, he wanted to see names that were real early where the shorter term moving average is going above the longer term moving average, not as a buy signal, but as like a trigger to get alerted to certain names even sooner. And so I thought it was a great idea, so I threw it on there. You could also adjust, for example, Minervini loosens the 52-week highs to about 25% when O'Neill's looking at within 15%, right? So you could go in here, distance from highs, and you could say instead of 15, you could put 25. As long as you're aligned with, what we teach and what are written about in all these great books, you can throw it into your screens, and you should be screening for it and see what works for you. All right, so I have a bunch of my own advanced filters that I save, and I can layer on top of other filters or just watch them by themselves, like EPS and sales with a trend filter, right? I'll go through that. And you'll notice the names that are really strong names are going to appear on multiple different scans. So that kind of, honestly, that's a lot of them. And then once I've done that for the 1 year, I'll also look at the 3 month, 6 month, or from, the lows. Now, let's kind of talk about, let's go back to, we're just going to run a big earnings and sales screen with high RS. And this is where I think a lot of you are kind of getting lost, is you're running this screen and you're seeing a lot of yesterday's leaders that are kind of breaking down, right? And let's pull up SNDK. So still a 99 on the 1 year RS. Why? I mean, it's up 3,500% even from this pullback and this kind of breakdown. And this is kind of a good thing. So I do want you to realize, let's scroll out and realize that when SNDK was breaking out in January, but even when it was in this consolidation here, we had this big, strong up move, right? That gave it a high 1 year, 6 month RS, like you see right now. But inside this consolidation, it looked very similar to this, low, underperforming RS. And a lot of you just take that as it's bad, like it is right now. But you got to take the full context. This is where you have to understand the big picture. You have to understand the market. You got to understand all this stuff. Like, this is a different story than now. We see that price is finding support on the 50-day. It's tightening up with higher lows as it's moving towards highs. Look how low the volume was drying up, right? And on the higher time frame, we got a high 99 RS, right? Meaning even when you see a low RS while it's in this consolidation, that's actually a good signal. That's telling you might have an opportunity to get in the name. Because when over here, when it's just tearing up like it was before this consolidation, yeah, it's going to be like 99, 95 across the board from the 1 year all the way to the 1 week to the daily, right? It's just going to be, and you're going to say what I hear a lot of people say, it's extended. Well, yeah. But in here, when you had an opportunity as it was moving towards highs to buy this thing, a lot of people were missing it because they saw a low RS on the lower time frames, on the 1 month or the 1 week, and they were scared. This is the opposite. So sometimes when I screen for a 1 year RS, right? Just like O'Neill and Minervini and Zanger. But I'm actually sorting and looking for the strong names with the weaker short-term RS. Why? Because that could be telling me exactly what you see here back in late 2025 before the breakout in January of 2026, right? And then at that point, I'm just on whether I'm setting a buy stop to buy as it breaks to new highs with a stop at low of the day, or right at the last higher low, whatever your method is. So the key is this isn't always bad when you see this. Now, why is that different now? Well, one, we broke pretty far below the 10-week or the 50-day, which is the blue line. Yes, we had this strong push back up, but instead of being support, it became resistance, and we peaked above, and now we're kind of falling apart down. Yes, could we pull back, set a higher low, not break this low, and rally? Yeah, absolutely. But as of right now, today, as this video is recorded, this isn't something you jump in. This does not look right. It doesn't look like this. It doesn't look like this tightening as it moves to highs. We don't see the volume drying up like that with big volume as it moves through. Even here back in April, right? This was much better. We're finding support and we have higher lows. This much uglier. And so you need to be more cautious when we see in this the short time frames. So sometimes, bottom line is, sometimes when you see high RS but this deceleration where it goes lower, 45 and then 34 and even lower, that actually could be a sign that it's over. It's no longer going to be a leader. It's kind of breaking down and falling apart. Or, like we saw here, the same exact RS could be telling you a buying opportunity. So that's where context is everything. Understanding how to read a chart, the setup, price and volume, how it all comes together with your screening. And that is why a lot of the names that looked great, Light. I was buying Light back in here. At the time, it was a 98, 99 RS. But on the shorter term time frames, it was probably lower because it was consolidating, pulling back. But you see how it was finding support and then setting higher lows before it broke out? Same here. Much different picture than what we're seeing now. But at the same time, I'm checking up on these names because I cannot disregard still the higher RS, and you just don't know what's going to happen in the future. These could build out a little longer, create better buying opportunities, and run up like they did in the past another 100, 200%. All right, so that kind of explains that. And again, I hate to go back to it, but the market. You got to understand, if your screens aren't working great, you also got to put it into perspective here. Let me actually drag this screen up a little bit. We're growth stock traders. So this is the NASDAQ composite. Here's the NASDAQ 100, which has been arguably the leading index since coming off of the bear market in 2022. That's really kind of led us in the right direction with growth stocks. Look, we're under the 50-day again with the NASDAQ 100. Not good, not great. Look at the NASDAQ composite sitting right around that danger zone. Now, yes, this could still hold up, create a higher low, break to new highs, and that could happen this week. And all the caution, that's why you got to be able to change overnight. That's why Paul Tudor Jones says you can be bullish in the morning and bearish in the evening, or vice versa. But this is impacting right here. This is definitely impacting your screens for growth stocks. And it's definitely why we've been whipsawy again. So it's not like this where we have the same industry groups and the same names performing most of this entire time. We saw we had biotech in here, and we had a lot of defensive areas and medical and stuff as growth was getting destroyed. And now that growth was leading again in this window, it's now in this little pullback back to rotating out, and it's back and forth, right? We haven't had real consistent leadership since back here. that's making it more difficult in your individual stock screening. But you got to understand that when you look at the context of what's going on with the market. And then when you dive deeper into just understanding the other indexes with growth, you see that over the last week, all the growth indexes on the bottom, QQQ, the Russell 1000 and 2000 Growth Fund, NASDAQ Composite, and the NASDAQ 100 Equal Weight, all down at the bottom again. When coming off lows, all at the top. So that's going to that's impacting what's going on. It's making it more difficult for everyone, beginners and experienced traders. So you have to understand the market context. I say it all the time. It's something I got from O'Neill. 75% of stocks just follow the market. So, a lot of times we'll kind of see what's going on in these screens before it hits the indexes, but also the indexes, they feed each other. So that's what I wanted to cover there. So I guess besides that, yeah, the rest is really personal. So your process, like I'm not going to tell you, I don't know your life circumstances, when to do your screening. I don't know what time frame trader you are, whether you're a swing trader. And then even within swing trading, there's different time frames. There's people that hold for a few weeks to almost a couple months. There's people that are like days, like 3 to 5 days, 3 to 10 days. So you're going to use kind of the rank by RS feature slightly differently. Some of you are going to care about fundamentals and some aren't, or some are going to do both. Like, you might trade stocks in play that don't have the fundamentals, but high RS, great chart pattern, but you're also going to screen for big earnings and sales too. Like Kwalamagi did read How to Make Money with Stocks. He did study Dan Zanger, and so he did screen for some of that stuff as well. But then he also did things that were different. So, and that might be you. All right, that's all I got for this video. And again, make sure you understand this is screening, but then you also can sort within your screen. So you can look at, a 1-year RS on 70, but then you can sort off of, hey, what's strong over the last month or what's weak, so I could potentially look for pullbacks or whatnot. Last thing I want to mention. Okay, so I just want to clear this up because some of you might notice why I'm recommending names that have a low. Let me show you. I think it's RELY. Yep. RELY has a 70 right on the border of a 1-year RS. And Minervini says 70, O'Neill's 80 or higher. Now, O'Neill's research on that the majority of the biggest winning stocks before they had their big breakout was at 87. So a lot of people would be like, man, why are you even looking at RELY then, right? Well, this is something that I did on purpose with my screener because a lot of the times, I won't mess with this. A lot of the names I'm buying have 90s or in the 90s. But in these market changes like we're going through in new industry groups, or maybe we don't have the real powerful names, sometimes I'll look at other names if everything else checks out, like fundamentals look good, chart pattern looks good, I've been doing well, and I'm willing to take a shot at another area of the market. Now you see 70. If you look at RELY on Market Surge, it's a 93. And so you're probably like, whoa, that's a big difference. Why is that? Well, that's a 93. We're both using the S&P 500 of the benchmark, but that's a 93 out of 11,000 stocks that Market Surge is looking at, right? It's rating it within those 11,000 when I'm looking at it within the 3,312. So I have the 11,000 in the back end that I'm starting with. But remember, I wanted my RS to only give me a relative strength rating based on my actual tradable universe, right? Getting rid of penny stocks, getting rid of ETFs because I have my own ETF screener, getting rid of names that just don't have enough liquidity. So I wanted at least $5 per share. It's got to be in the NYSE ARCA or the NASDAQ. It's got to be 100,000 shares or more, and that's not even a lot. O'Neill was trading at least 300,000. Dan Zanger likes to have 1 million. And then the market cap is set at 100 million, when a lot of the names I want to be in is $1 billion and above. So it's not too restrictive if that's what you're thinking. And so that means my RS is more accurate within my tradable universe. So I'm not crapping on Market Surge or IBD. I actually love them. It's just a slightly different way to look at it. So that's why a 70 on mine with a name like this is still something that I'm going to consider. Now, on the flip end, though, if you look at other powerful names, like let's look at Dell, right? Like I have a 96 on the 1-year RS. Let's pull up Dell on the chart, and you can see over the last year, just nice, powerful move. Well, what is it on Market Surge if mine's a 96? 99. So we're close. So most of the time, I will say, if we go through tickers, most of the time we're pretty close. We're within a few points, especially with the strong names. But with some of those names that are like coming out of bases, it is going to be slightly higher on Market Surge, just because again they're grading it off the 11,000, and I'm doing just the tradable universe. So just want to clear that up in case you see that or you notice it. Or you're wondering why I might look at some names that are a little lower on the 1 year. But usually, going back to, I think it was REYL, nope, LY, yep, Relay. All right, but you notice I have a strong 6 month, a strong 3 month, a strong 1 month. So I'm seeing an acceleration still. I'm still seeing I'm still seeing some good relative strength, right? And it's been strong over, this period here. All right, that's all I got. I'm trying to think if there's anything else I'm missing. And yeah, if you got any question of this, just let me know, and I wish you all the best. Take care.